Hi there, Aaron Johnson with the Dwayne Johnson Group and Bridger Financial Services, and just wanted to give you a quick update on what the Fed did. I will also be sending out exactly what I'm going to say now, sending that out in an email a little bit later today so that you see that. But on Tuesday and Wednesday, the Fed met. Expectations last week were that the Fed was going to increase interest rates by another 50 basis points or 0.5%. And that would move the Fed funds rate up to about 1.25%. But over the weekend, it was leaked that the Fed was going to be a little bit more aggressive, trying to combat inflation, and would raise rates by 75 basis points. And on Wednesday, that's exactly what happened. They raised it by 75 basis points. And at first, the markets erased all the daily gains they had. But then as Fed Chairman Powell was speaking, it dramatically increased, the Dow rose over 600 points. And then just to the last few minutes before the market closed, came back down, and I think we were up about 300 points that day. And if you remember back to May 4th when Chairman Powell spoke, he told us that he couldn't guarantee a soft landing with inflation. The Dow rallied nearly 1,000 points in the last hour and a half of trading, all to lose it the following day plus a little bit more. And that turned out to kind of be the catalyst for the new lows of this year back on May 20th. And that's exactly kind of how this week's Fed meeting turned out. The only new thing that really happened was that there were 5 other central banks around the world, Hungary, Switzerland, Brazil, UK, and Taiwan, that also increased their Fed funds rates. So as people have kind of been able to sift through his comments, look around, it's become abundantly clear that the economy isn't as strong as we're being told by our politicians. So the short-term rates are now expected to be right around 3.5% by year end. The Fed said that they do expect GDP growth to be about 1.7% for the next 2 years. GDP growth in the fourth quarter of 2021 was 6.9%. So given that the first half of 2020 will be flat and more likely negative, based on what the Atlanta Fed is projecting, that means the Fed projects that will now grow at 3.4% for the second half of 2022. And one of the other things in the comments was that the Fed chairman believes that we will end inflation this year right around 5.2%. So if we want to get there, that means we have to increase rates another 2 to 3%. To get to that 3.5% by year end. The Fed also said that they are projecting unemployment to actually increase to 4.1% over the next 2 years. In addition, the current administration continues to tell us that we've got a very strong economy and that there's nothing that it can do about the sky-high energy prices of gasoline, which we know is incorrect. When this administration took over, they cut a lot of the things that we do to produce gasoline, and we are now importing more from places like Russia and Canada and now going to Venezuela. Additionally, they're also looking to spend a lot more money on the budget next year as well. So after assessing Chairman Powell's comments, and concluding that while the Fed is trying to combat inflation, and that's a good thing, people are now worried that the Fed is now marching us straight into to a small recession. And with a long weekend coming up this weekend, people are concerned about that. So the markets turned the other day, and we were down about 700 points. I understand with the daily ups and downs of the markets that it can be very stressful. And with all of you, that's why we have a plan and we want to try to stick with it. But if you are getting worried, if you're nervous about the market, give us a phone call and we can go over some of those options. We are still higher than we were 2 years ago. So if you do have cash on hand and you're kind of wondering what to do with it, give us a phone call. We can talk about some of the options, and maybe you want to start dollar cost averaging into the market. There are also fixed indexed annuities that can be great, that you can get money as the market, you can earn income as the market's going up. And there are also CD alternatives like fixed annuities where you get just a flat interest rate, very similar to an annuity. But again, if you have any questions, please give us a phone call. We're more than happy to talk through anything with you. Have a good day and have a good rest of the weekend.